Right, I have the pleasure of introducing our next keynote to you. Jacques Boschung from Halborn is going to talk about transforming banking with distributed ledger technology.
Thank you very much. Thanks. Thank you for coming to that session. Glad to be here today. All right, so Halborn is one cybersecurity provider. We are a leader in that space, and we come from the intersection of Web 2 cybersecurity and Web 3 cybersecurity on one hand. And the other thing that we do is that we cover traditional institutions like UBS, BNY Mellon in the United States, or Fidelity in the United States, but also large Web 3 institutions, settlement and clearinghouse, like, for instance, Grayscale, and we work with the likes of Coinbase and plenty of DeFi. So I'm the CEO, and I'm very happy to have this conversation with you today. So today, I will speak about transforming the transformation of the core banking process thanks to DLT. That will be my topic. And how can we do that in a secure manner, which is a key consideration when we look at all the threat landscape nowadays. So our mission statement at Halborn is to enable that new digital transformation. And we believe that we are faced with the third digital transformation wave that is happening in the banking world after the first digitization in the 90s, the cloudification that started in 2010, and what we do today with decentralized ledger technologies. So what I want to speak to you about in the next 15 minutes or so are those following topics. Look quickly at the history and why the threat landscape has evolved so much and why vulnerabilities have been so taking a big lift as we see. Also speak to you about this DLT adoption in bank with use case, how Halborn is protecting the assets of those institutions. Speaking about the threat landscape, showing you some of our technologies and coming to a call to action. But let's start with the history, essentially, because you know that who ignores history is doomed to repeat it. So what is very interesting, in 2009, that's the big white paper, that's the launch of Bitcoin, which is a single-threaded digital currency in a decentralized ledger, only one function. Then 2015, that's Vitalik Buterin, that's Ethereum, and there we completely change the landscape. We go into what I called composable systems. Big difference. It leads, of course, obviously directly to the explosion of ICO in 2017, to the so-called DeFi summer that happened in 2020, till today, where we see the adoption of DLT taking its grip within traditional financial institutions. At the same time, we are looking at the future, and we believe that potentially in the future, every security will be issued on-chain. That would be a massive simplification of the creation of securities. We also believe that perhaps we will have a unified ledger, and we are quite convinced that stablecoin will be the name of the game for the trading of those securities. But at the same time, what happened was $10 billion of hacks over the last 5 years. $10 billion of hacks over the last 5 years with a clear acceleration because you know that this year only $2 billion of money, of real money, has vaporized because of hacks, starting with a Bybit that you all heard of. So we are coming to a junction and we need to understand why. And the why is very well explained in that chart. That's the complexity and the capabilities of the blockchain environment, which have raised massively. So from a single threaded, as we have seen in 2009, then when we move into Ethereum and the smart contract, we move into composable architecture with things like software development kit, with things like, for instance, virtual computing environment, with multiple applications which are built on the building blocks of smart contract. And now, fast forward, we come to today, we add an additional layers of complexity with blockchain interoperability, with layer 2 coming on top of the layer 1. So those bridges, those oracles, and so on and so forth. And that's why you see that arrow, the vulnerabilities are going up the ladder at high speed. So we have a very complex, extraordinarily complex and exploding ecosystem, which starts with a DLT, with a layer 1, and then you look at the issuance, and you go up to custody. We were speaking about custody just a minute ago. And you have all those actors playing around in an exploding environment, because just stable coins today are worth 250 billion, and we expect the issuance of securities on-chain to be worth 30 trillion, in 2030. So is it unstoppable? Yes. But are they unstoppable hacks which will be happening? And that's a big question that banks are asking to themselves. And that's why I will give you now with 3 examples of banks, of DLT initiatives, how Halborn has been contributing to the security of those initiatives. So those 3 examples are extremely typical of what a bank can do with a digital ledger that cannot be tampered. So let's see. So the first example is very easy. That's cross-border and commercial payment. And you know that in cross-border and commercial payment, if you do those things on-chain, you move from those 72 hours of transaction time between the moment of the customer purchase and the deposit on the merchant account to something like 10 minutes. So it's a massive efficiency gain. And the biggest pilot in that domain has been conducted in Asia, and it's based on CBDC, and it was really a big initiative implying multiple institutions. And Halborn has done the complete architectural review of all those junctions, of all those intermediaries in that initiative. That was our contribution. It was a successful implementation, and we were able then, they were able finally to get to that settlement time of a few minutes instead of the 3 days we were speaking about. The other example is based on the same kind of philosophy, but moved to the next level. That's the clearinghouse. Settlement and clearinghouse are the man in the middle. Will they be gone? And this one is very interesting, because if you see on the right, on the left-hand side, of this chart, you see the traditional settlement with a central registry, with a central repository, and you see on the right-hand side of that part that we can have atomic, very fast on-chain settlement if you remove that man in the middle. And here we worked with one of the leading clearinghouse, and not only did we review the security architecture of what they do, but in fact what we actually did, we did build the entire DLT-based system together with them. So it was really secure by design right from the start. And it was very successful initiatives that could really reduce the latency and position that clearinghouse as being a leader in that specific domain. So it's almost disrupt yourself. If you are a clearinghouse, you do that, you are disrupting yourself. And the third case, or the third illustration, I would call that the flagship. That's the big prize. That's the issuance of securities, in that case bonds, on-chain. And we have worked together, as you can see on the chart, with UBS. That was an initiative of UBS, together with other partners, SBI, DBS, and the Monetary Authority of Singapore, to create the first issuance of security on-chain, in that case public chain. It was made on Ethereum, so on an EVM environment, and test it live between those partners. Big success, what Halborn has done in that specific context, we have done all the smart contract, plenty of smart contract on Ethereum, as you can imagine, composable architecture. We have done all the review of those smart contracts, and we have done also the initial design. And by the way, we are the official UBS smart contract assessment partner moving forward. Now, there is a big if you see on the bottom right of that slide, which says, okay, that's a big prize to create, to issue securities on-chain. But for that, you need to have equivalence between the underlying securities, for instance, real estate, and what you have on tokenized on the chain. And that's not the case yet. So let's have a quick look at regulation, because regulation plays a significant role. And that's a regulatory adoption chapter I wanted to talk to you about. So real quick, we don't need to spend much on the fact that stablecoin, for instance, is bigger than MasterCard and Visa together in 2024. It's already 6 trillion in the first quarter of this year, which is a trajectory for most probably 40 trillion of transactions which have been settled and executed on stablecoin. And there is this regulatory acceleration. MiCA has come into force this year, as you know. In the US, they have also removed that SAB 121, which was forcing the banks to have the cryptocurrency of their customers on their balance sheet. It's gone. So it's really accelerating the pace. But this acceleration of the pace has also some limits. And you can see here, I took the initiative to make that comparison because it's an interesting comparison. You see on the left-hand side, the ambition of the US regulator or the Senate. You have plenty of bills which are cooking. You see in the middle what MiCA, which is the key regulation for crypto in force since February, is foreseeing. By the way, when I say MiCA, we all should think about DORA, because if you are within the MiCA, you have to apply the Digital Operational Resilience Act as well. So it's a lot to think about if you are a Web3 player in that space. So what you can see on the slide is that on the left-hand side, it's all aspiration in the US. You see in the middle MiCA where they are, on the right-hand side where Switzerland is. And you take the second line, equivalence of tokenized asset and underlying asset. It's not in MiCA. It's foreseen in the US, aspiration. And it's here in Switzerland since August 2021. So we are really clearly leading the pack. Next one, we were speaking about custody before. If you are custodian of crypto, you are regulated in Switzerland by the FINMA. It is acted. It's not so clear, by the way, in the MiCA case, and it's an aspiration for the US. And last but not least, this ability to trade 24/7 is given de facto in Switzerland. It's a plan and ambition somewhere else. By the way, call to action, you know there are some shadows coming on the Swiss regulation because of the Credit Suisse collapse. So I think in our industry, we should be all paying attention to what is happening there. Okay, threat landscape now. It's nice to have regulation, but there is a big threat landscape. I was mentioning before the $10 billion value of hacks that happened in between 2020 and today. The key message out of this slide is the following. You see that 6 billion out of those 10 billion came from Web 2, traditional cybersecurity intrusion through the traditional cybersecurity attack vector. So you have to have a comprehensive and holistic approach when you think about your project or your initiative, because it has to be comprehensive, and it always starts with the traditional spear phishing and all the type of attack you can imagine from the Web 2 world. So what is interesting when we speak about that, you see on the left-hand side all the framework, security framework, which exist in Web 2. You will recognize SOC 2 Type 2, you will recognize NIST, the European NIST, and so on and so forth. Plenty. But when we speak about Web 3 now, there is plenty of initiatives, but nothing established. We have things like the BSSC, for instance, Blockchain Security Standard Council, but it's only for the tiny technical part. Okay, another one which is mentioned up there under C4, that's the CCSS, Cryptocurrency Security Standard. Another corner, okay? So it's missing. And what we are doing at Halborn, you see, we are member of all those committees. We are trying to federate all that. So an example is what we have achieved with BVSS. So some of you know, if you are working in cybersecurity, there is a very well-established measure of your vulnerability called CVSS, for Common Vulnerability Scoring System. And we have created at Halborn the BVSS, which combines the exploitability and the impact of a hack it also combines the scope and the reversibility of the hack. And it's a grade between 0 and 10. So it's open source, everybody can use it, and it covers all the layers of a blockchain, of a DLT. So that leads me to the final chapter, Halborn solution. You heard a lot about that. We are at the intersection of Web 2 and Web 3. We are able to do advisory services, secure by design, education. We do a lot of education. We are the biggest educator of BNY Mellon, for instance, the largest custody in the world in New York City. And we do all those assurance services on top. And that's a pre-announce, a preview. You have seen the complexity of legislation, especially if you are deployed in multiple locations. We will be launching this summer in an MVP and later this year a solution which is AI-based called the Compliance Pilot, which will be able to tell you what is your business, what are the regulations you are subject to, how to cope with those regulations given your infrastructure, and as I said, your location. And that will be fully automated based on AI and part of a bigger solution. Finally, a quick call to action. Momentum we have seen. The bank will adopt DLT, but it's embedded with a lot of risk, and they are mindful of that. Regulatory clarity is coming, but the threats are, I would say, multi-phased, and you need to deal with that. And finally, if you are a DeFi, if you are a Web3 and you want to work with big bank institutions, make no mistake. They will ask you to have all the badges of honor to make sure that you are secured because you are part of their supply chain. Thank you very much for your attention.
Thank you.